I have some good news for you listing agents as you market your home for your seller and get that thing sold. When we look at the VA loan as compared to the FHA, a lot of times we're going to put those in the same category, but indeed they are not. And I'm going to tell you 3 reasons why it's much easier to accept a VA loan as compared to an FHA loan. So we've all heard of the FHA flipping rule. And if you work with investors especially, they're going to buy that home, flip it, and sell it. Well, they are not allowed to sell it to an FHA client until the 91st day from the recording of the deed. But if you have a veteran purchasing the home, the VA doesn't care. There's no timing requirement. So if they purchase the home and flip it and it's ready to go on the market in 30 days, 45 days, 60 days, a veteran can go ahead and purchase it. Another thing is that within 6 months of an investor purchasing a property, he may get a sweet deal on that property and he may double the value. If he doubles the value or more, then a second appraisal is needed on that home if you have an FHA buyer, and the FHA buyer cannot pay for that second appraisal. A third thing to consider with the appraisal is that also an FHA appraisal sticks to the property for 6 months. There's an FHA case number assigned and it sticks to that property. So if an appraisal comes in low with an FHA buyer and that buyer walks away and another FHA buyer comes in within a 6-month time frame, that same appraisal will be used. With a VA case number, that's not true. The VA case number follows the veteran. So if you have a VA appraisal and the veteran walks away, it does not stick to the property. So these are things to consider as you market your seller's home and why a VA offer should be strongly considered. Be a veteran advocate and don't FHA My VA. Good news for my veterans. Did you know that if you're going to leave your current residence with your VA home loan benefit and move to another one, whether you're PCSing or upgrading to another home in town, I can take 100% of that projected rent to offset that mortgage, which is huge. On conventional and FHA loan guidelines, they're much more strict. But on VA, I can just offset that with a rent agreement, and then you can go on and get your next home. Do keep in mind though, due to your VA entitlement, that second home with VA has to be at least $144,000 or higher in purchase price. Not hard to do in these days and times, but keep that in mind. Go to the next house, and most likely you'll have enough entitlement still with the 0 down payment. Just depends on where you're going. What are the county loan limits? But we can take a look at that and let you know if you have a down payment needed, which is when you would use what's called bonus entitlement. But I have had clients with as many as 3 VA loans out where they had 0, yes, that's right, 0 down payment. Love the VA home loan benefit. Yeah. One of my favorites is the VA loan, and something I think loan officers forget sometimes is to calculate the residual income. What is residual income? It's basically what's left of your monthly income after you pay your bills. So things that are deducted from residual income are things like basically all debt, installment, revolving. Also in the residual income, we calculate the square footage, a percentage for utilities on the home that they're purchasing. Another big one that sometimes can be missed is child care. The loan application doesn't ask about the child care, but the bank statements will probably show it. If it's not caught, that is going to come out in your loan disclosures. It's going to ask the veteran how much they pay in monthly child care. So you want to ask your veteran up front how much they're paying and add it into their debt ratio to make sure they meet the requirements. And those requirements are different based on what area of the country they're living in and their family size as well. A cool fact is that if you have an active duty member, then you can reduce their guideline residual income by 5%. So that's a really nice thing to add in. The VA home loan benefit and the 4% seller concession rule. Every loan has a seller concession or seller credit rule. VA's is 4%. So if you were buying a $300,000 home, you could get up to $12,000 as a seller credit. However, there is a misconception on the VA home loan benefit as to how that can be used. Many people think that 4% can only go towards closing costs. Those are things like title fees, pest inspection, credit report fees, but that is not entirely true. That's not where the road ends. Good news. The money from a seller can also be used to pay down debt. It could be used to pay part or all of the veteran's funding fee. It could be used on their prepaid escrows, taxes and insurance that they need to close on the home. It can also be used as a gift, like a microwave or a TV, and for permanent and temporary interest rate buy downs. So on that 4% rule, that $12,000 can actually go towards any of those things. And then if additional funds were available, they could be used towards closing costs because there's no limit with those when it comes to the VA home loan. So if you've ever been told there's too much money that we're not going to be able to use it from a seller credit, or if you're a veteran and you've been told you don't qualify because you need to pay off debt first, talk to a veteran mortgage advisor and see if they can make something work. You need to talk to somebody who understands how the seller concession works on the VA home loan benefit. If you have any questions about yours, give me a call.